Good Friday morning, everybody. Got a lot going on this morning. I thought we'd do it via podcast, fighting some allergies. So if you hear some sniffles here, forgive that. First up, lots going on here. We're going to talk about oil. Big, I see a big bullish pattern developing here. We're going to be taking, I believe, some additional action here soon, in addition to what we already own, which is Falcon Oil and Gas and Petrobras. I think we'll also take a look at gold. And the miners, big stuff happened there this morning as well. Falcon Oil and Gas, big news there as well from the scientific inquiry, and their interim report is out. So let's get right to it. We'll start with the 2-year chart of oil. Take a look at this chart because, first of all, the first thing you see in this chart is that a clear bottom was reached in early 2016. We called that here. We were also, as you may remember, bearish of oil from over $100 down. Once oil reversed back higher, I became bullish. And so this plays very well for us. And the entire theme of what we talked about now for a couple of years for you long-term subscribers, which is the global reflation trade kicked off a couple of years ago. I've only written about it about 1,000 times. It marked the bottom in the global economy, it marked the bottom in global stock markets, and it marked the bottom in commodities. Every commodity, whether we're talking about oil, gold, agricultural commodities, it marked the bottom, period. And it was a significant bottom, and it's still barely talked about. Most people are still talking about a sluggish economy, and I don't really know what they're looking at. But the Dow Jones is now up 17% since the election. JP Morgan reported earnings this morning. While the stock is down a bit this morning, they blew away estimates. And so banking is back. Again, these are issues and sectors we've talked about a lot here. The economy is back globally. There is simply no reason to be bullish. The Dow theory buy signal that we have now with both the transports and the Dow Jones Industrial Average hitting fresh highs on the same day together. Again, these are classic buy signals, classic bullish buy signals. The fact that there are more bears than bulls, as we saw in the AAI survey, is pretty stunning to me. It just tells us, again, as a contrarian, the public is not yet back in this market yet. They're coming back. But we're not going to see a high in this market until we reach euphoria stage. Does it feel like euphoria stage to you? No, because it's not. So again, as a trend-following investor, we must remain bullish. And the patterns we're going to look at today, all they do is cement my belief system around this, and they should yours as well. First of all, look at oil. Okay, I'm going to go through a few technical issues together. Look, obviously there's still more supply than demand, but demand is picking up again. That's the global reflation theme, okay? As you look at this chart, it's a little early. It's still a little early to be wildly bullish on oil, but we're getting close. We are not yet above the 50 and 200 day. We're getting close to the 50-day. The VRA system cannot go bullish. We cannot turn fully bullish until that happens. So we're not there yet. But look at everything that's building here. Pattern of higher highs and higher lows, right? This is a 2-year chart, by the way. As you look down, you see major support at $42 a barrel. We've bounced off that now level now 3 times in just the last year. Look how the volumes are building. Okay, volume analysis is rarely done anymore. A lot of technical traders only look at price, and I understand that argument. But I use this as another tool. And when the smart money is buying oil this aggressively, it tells us that at least it should get our attention. It's got in mind. As you scroll down and look at the RSI, MACD, stochastics, and money flow, these are all patterns, again, of higher highs and higher lows. And yes, you can do the same technical analysis for technical indicators as you can for individual stock prices. Again, these are just additional tools that you can use, but they all point to the same thing. They all point to rising prices and what is most likely a hugely bullish 2-year base that's built in oil that's going to carry us forward. I've been short-term bearish, as you know, but we are now bottoming. I think, and it fits perfectly, again, with the global reflation trade. So that's oil. Again, that's great. It's great for Falcon because you just don't want to have a bearish macro energy environment. Even though Falcon's insulated because it's natural gas, it's Australia, it's a story stock because of both Australia and South Africa, you still want a bullish macro, positive macro environment, which underpins every energy stock. Obviously, the same thing applies to Petrobras. I'm working on a new piece on that now. We're underwater in that stock. I'm not going to average down on it. But again, if we're right about this, if oil gives us a new buy signal, which it looks like it's probably going to happen in the next week or two based on what I see in this chart, then we're going to see major moves higher in energy stocks. And we will be taking additional positions here, probably in like a 3-time leveraged energy ETF, probably in the E&P stocks or in the oil service stocks. So be ready for that. That'll be a nice opportunity for us to put away some solid gains over the next year as oil screams higher. And I believe that's what's going to happen. The same concepts really apply to gold. That's our next chart, number 2. Take a look at this chart of gold. Again, it's a 2-year chart. We've talked about it ad nauseum. Major bottom in 2016. Not to pat myself on the back here, but we called that. We called the exact lows in gold when the Fed raised rates for the first time in almost a decade back in December of 2016. You can see what's happened since then. Now, gold has not acted great recently, okay? But when you take a longer-term perspective and you look at this 2-year chart, you can't be bearish of this chart. You cannot be bearish on this chart. It's a major low in place. It's a pattern, a long-term pattern of higher highs and higher lows. This matches perfectly with what I believe is the next big move. My target remains $2,000 an ounce for gold in the next 9 to 12 months. Maybe I miss it by a bit, but I don't think it really matters, does it? Because we're looking at a sweeping and ascending bullish triangle here, short term. You don't see it in the chart this morning, but gold is up this morning, now $11 an ounce to $1,228 an ounce. And it's getting back into the channel that it fell out of recently. It got a lot of short-term money out of it, that's why charts are a good tool. But if you read them as an exact science, you'll just lose money, because with algorithms these days and high-frequency traders, they know that chart watchers can get taken out of positions, right, with false moves. And so you see this more and more now. But again, just be aware of it. We need gold, to get back above its 50 and 200 day. It's approaching the 200 day. This morning, we're only $7 an ounce now below the 200-day moving average. So, again, that'll be a big buy signal. Volume is beginning to increase. Very good sign. And, again, the same thing we saw with gold. Look at the RSI, MACD, stochastics, and money flows. These are all rising trends, right? And not many people look at these, but I do, and I have for a long time, because this shows, again, gradual improvement. I believe it shows, what it really tells us is that a monster move higher is coming, and this is the base that's forming. This is a long-term bullish ascending triangle base that's forming, and when it explodes higher, and that's exactly what I believe is going to happen, it will explode higher. Most people will just be left holding the breath. So we're going to make sure we're very well positioned. We already are. But our next move here, and let's just scroll down and take a look at our next chart, because this is of a GDX, which is the miner ETF. This is an even better looking chart. Again, 2-year chart. We still work to do, right? We're still not above the 50 and 200 day. Okay, so that has to happen. We're not going to, get stupidly aggressive in advance of that. But again, look at this major bottom in December 2016. Look at the higher high, higher low now. The higher low happened in December of 2017, 1 year later. And now we have a really nice looking triangle here that once it breaks out on the upper side of this triangle, everyone's going to be looking at the area of about 2350. 2350 on GDX. And by the way, it's up over 2% this morning. Leverage ETFs are up about 6% this morning. We need volume to build. We still have not seen buy-side volume. That has to lead. The miners lead, right? Stocks, equities lead the commodity. That's what I've never seen a bull market happen in commodities where that hasn't been the case. And I know never is a long time, but in my 32 years, I've never seen it. That has to happen. So we'll be watching this very closely, watching for a breakout in the miners in advance of the equities. And also because gold, the miners typically move about 3 times the level that gold and silver move. And we want to see that take place. So we want to see a big breakout of this ascending triangle pattern. We want to see volume come in. Next up, and I'm going quickly because I want to get this out before the market opens. Very important news overnight from Falcon Oil and Gas. Not from the company itself, but from the scientific inquiry, which came out with their interim report. I didn't include the interim report here, but it's available by clicking on the link that you see right there. What you see in front of you is the actual scientific inquiry community update number 14. Now, as you read this from the inquiry chair, Justice Rachel Pepper, who Philip quickly talked about quite a bit in our meeting in Las Vegas, you read this and it's just negative. I mean, it's just hyper negative. All you see risk. At least that's what I saw throughout this. And negative commentary from the community. I think this is a classic case of psychology at work here. She also makes clear in this that she has no power over the Northern Territory's final decision. All her job is to lay out the risk and the upside, et cetera, et cetera. I see, again, this is me. Philip didn't say this, by the way. He was very cautious about this, as he should be. Look, here's the deal. If the scientific inquiry comes out with their draft report in a couple of months before the end of the year, maybe 3 months, somewhere in that range, and is highly negative, then maybe we have a concern. But as you scroll down and look at the next piece, okay, this is what everybody's talking about. I must receive this article last night from I don't know how many people. Lots and lots of you sent this to me. Please keep sending. I love getting your emails. I love getting your feedback. I love communicating with you. But this is from the Australian, which is the paper of note there, and it's from the International Energy Agency. Okay, the IEA, just absolutely taking apart Australian leadership and their failure with respect to the energy crisis that's evolved in the Australian markets. You also see some really interesting quotes here from leadership in Australia. I'm looking for as I read this. I meant to underline this, but you'll read it. There essentially are threats here that demands and threats that these silly moratoriums and restrictions on getting gas out of the ground must be lifted. Demands to lift these. So, I think what it's setting up is if for some bizarre reason the Northern Territory comes out and keeps their fracking moratorium in place, this looks to be setting up to be an override from the federal government, which we've talked about before. That's in their purview. It's what they can do. They've only done it once, by the way, in the history of Australia, and it was over an issue of whether or not you can end your life early if you choose, and that was the only time the federal government has overruled a state or territory. This may be the second time. I personally don't think it'll come to that, folks. What I think what this tells us is this is the time to buy Falcon Oil and Gas. A lot of investors simply cannot buy. Right, like institutional money, anybody managing money for other people, they cannot buy until there's a final decision reached. We don't have that restriction, and this is what buying low and selling high is all about. Falcon at 29 cents a share is a screaming buy. It's the single best buy that I know of, as Philip said at our meeting in Vegas. Look, this is a direct quote from Philip. He must have said it 3 or 4 times. Look, our stock is going to $1 at least, and then upward from there. And so I think he's spot on. But folks, I'm going to get this out before the market opens, so we'll keep this fairly short and sweet. Hope you have a great day, even better weekend, and thanks again for listening. Bye-bye.